Well, here we are again with the market still creeping up. I would have thought they would have taken a correction by now, but of course, as I discussed yesterday in Economy and Markets, we have this China trade deal, which has been imminent every week or day for months now. But it does look like at least something should be coming to a head because of this kind of meeting today and stuff. So what we really need here to gauge this dark window, and again, the strength of this rally since December, the fact that it's held up so well, only strengthens the argument for the dark window. And this looks to me to be the first wave up of two more to follow. First wave up, second wave correction, third wave up, which usually is the strongest of anything, fourth wave correction, fifth wave up. So what's happened here is entirely consistent with my targets for 9,400 to 10,000 on the NASDAQ, 33,000 plus on the Dow, 3,500 on the S&P 500. If this is the first wave up, we really need some definition, some gauge. We need to see the first pullback from this strong rally. And that could happen sharply very soon. It could happen a little more gradually over a number of weeks. And the markets do look like, as I said yesterday, it does look like we're probably, we're 2% from the highs on the S&P and Dow, 3% on the NASDAQ. So we're very likely going to test or get very close to those highs before we pull back. And that could happen because there's finally an announcement and the markets have discounted so much it just kind of goes up one time and then starts to correct and deal with reality. Or maybe there's a disappointment here and the deal's not as strong as thought, or it takes longer and then we have a correct. Either way, we need to see this first correction. And then I'll be able to gauge timing and targets better. But again, our targets still look right on. Everything says we're going to see this final blow-off rally. Obviously, we had the Fed capitulate earlier, but that's because of slower growth. And now this China trade deal, the market's been waiting on that, and it'll probably happen in some form and pretty soon. But the best thing that could happen for the markets here, China has been stimulating again since they've been slowing. Europe's been stimulating more and holding back off of tapering as they intended to. So it could be that Europe starts coming back after slowing a bit, China a bit, US looks like it's actually slowing, but altogether we have just enough growth to keep the dark window in the stock market going because it doesn't need much good news when it's on crack like this. But not enough growth to get the Fed tightening or any other central bank. So it still looks Goldilocks for the dark window, and we'll keep you updated.